Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 15th, 2009. AccendoTraders.com, effective video, technical analysis trade plans delivered daily. Each time we come together, we try to prepare ourselves for the next trading session. We do that by reviewing where we're at, and then we want to see what's going to affect our positions by looking at the economic news, earnings. On the weekend, we want to see what some of the experts are saying about the market, check the sector for trends. We always look at the major indexes to see where they may be leading. We always scan for new trades for the next day. And again, that's one of the things we think sets us apart. We don't just give you trades we're following for weeks. Every day, we give you trades that we think are safe to enter for the next day. And as always, by having a trading plan, you're able to have time to spend with your family. So when we look at the week that was, the market ended down for the week. Our NASDAQ, which was once positive, very barely last week, is now back in the negative for the year. But the week that was focused on government. They're the ones that kind of moved the market one way or the other. From Geithner to the banking CEOs to Bernanke to the Senate and the stimulus package. That was the week that was. So, we started off. And if you remember me talking to you guys last week, I said, who knows when this is going to pass? It was supposed to be last Friday, and then it was supposed to be Monday, and then it kept getting kind of pushed on. And so they postponed Geithner to Tuesday. So the market was in a wait-and-see mode to see what did Geithner had to say. And unfortunately, what he had to say wasn't really that good. The market was really looking for a bad bank proposal, some details on that. And he really had nothing to say about that. So it was a classic sell the news setup because they were looking for clarification and they received none. Also this week we had some mixed news coming out of the economic calendar. We had better than expected January retail numbers. Our jobless claims rose, but again, late Thursday, as the market was going down, it was down 3%. There was breaking news that the government was going to subsidize mortgages, and we rallied the last hour of Thursday from being down 3 to being break even. And then the stimulus package, both the negotiations from the Senate and the Congress, Senate and the House passed on Thursday. It was voted on Friday, so that passed. But that really had little impact on the market. There was nothing new there. So next week, I think there's still going to be some government impact, although I think earnings may have an effect also. But the G7, the financial ministers around the world are meeting, and I believe Wednesday is when we're supposed to get more details on this mortgage subsidy plan from the administration. This week, remember, the market is closed tomorrow for President's Day. Nothing really coming on Tuesday. There's really not much that coming at all. However, on Wednesday, there is also FOMC minutes. The policy statements, now we're going to get the minutes. Maybe there's some language in there that could change some things, but I don't really expect the economic data to really be controlling things this week as much as what does the government have to say about this mortgage subsidy and some of our earnings. Now, again, the market's not open on Monday, but on Tuesday there's really nothing. But on earnings, we've got RIG and Walmart before the market open. Walmart can move the market. Afterwards, we've got Energy with CHK and Wynn casinos. And then you can see we have a ton of companies reporting this week, big name companies. We've got metals, we've got energy, we've got oil, Packard, Priceline, Internet. So we got plenty across the board, and that's why I think earnings will probably be the biggest thing to move the market. With the caveat of what's the government going to do with the mortgage subsidy. So let's go ahead and take a look at our three major indexes, the Dow, the S&P, and the NASDAQ. And you can basically see that we are at that point, that line drawn in the sand again, down here around 78.50, 78.40. Look at where the wicks bounced here, wick here, wick here. We kind of close here. Now, the good news is, we rallied. This is that Thursday last hour rally based upon the housing news. Now, that's not supposed to come until next week, maybe, or this week until about Wednesday. So that's why I said earnings probably will be our driver for the week. But what we really have here is we got a modified falling kind of 4 pattern here. We still have our downtrend going on here, but this is our line in the sand. And if we break this line in the sand, certainly the November lows come into play. Now the Nasdaq's a little bit stronger, certainly stronger, and you can even go ahead and take the time to kind of say, well, we're still kind of in a short-term uptrend here. So the Nasdaq's a little bit stronger. It's got plenty of room to fall, even to get to the line, down here at 1450. So the Nasdaq's definitely stronger, and then that might be to look at Nasdaq for some stronger bull plays. The S&P 500 a little bit weaker. It is at one of the lines. Now the true line is 8,000, but you can see also recently that this has been an area of battle congestion also. So we need to see the modified falling 4 pattern. We need to see the bulls to come in and drive this market back up here to the 50 moving average. The sectors that I'm watching this week, I'm going to continue to watch agricultures. Again, a nice uptrend. Check out metals, same thing, nice uptrend. Steel and iron, nice uptrend. Gold I like, but remember we have several companies this week. AEM, NEM have earnings this week. And also on the bullish sector side, I like internet. Little bit potential for consolidation there, but I still like it. On the flip side, look at consumer durables. That looks weak. Real estate looks weak. Resort and casinos still look weak. And trucking also looks weak. So those are the ones I'm going to be looking for the downside. And now we're ready to go into the education portion of our video. We're using the book Trading on Zone by Mark Douglas, and we're on the part, the dynamics of perception of power of association. So last time we got together on our free video, we talked about the tug of war that goes on in your mind. You've had a couple losing trades, and as you're going into your next trading session and you're looking at the market, and the market gives you a signal, but instead of enacting upon that trade, you begin the tug of war. Your mind begins to play tricks on you. You begin to perceive things that aren't there instead of just perceiving the setup that you've created as a part of your trading plan. And then you miss the initial entry, and then your mind starts going into more of a turmoil because it wants to get back the money that you're losing because you didn't get in when you wanted to get in, and then you just kind of go around in a circle. And so I think many of us go through this as our life cycle of a trader. As we go through our different stages and we metamorphosize into a successful, consistent trader, we have to learn how to deal with those situations, what to do when your mind begins to kind of go batty over the signals that you're getting. And so the basic question he's asking here is, what would happen if the situation was different? What would happen if instead of it being a losing trade, you had winning trades? Would you still hesitate after having winning trades? And more than likely you wouldn't. But he goes down here at the bottom and say, like most traders, when they start winning, they start increasing their option sizes, their number of contracts, or they start buying more shares because they feel like, woohoo, I'm winning, man. I can't be stopped. Now, of course, they're setting themselves up for a bigger failure. Remember, going back a couple months, we talked about the boom and bust, which is having a couple good trades, loading up on one trade, and busting out because you didn't follow your system. So, again, as we go through the stages of a trader, the hardest part, the thing that's going to take you to the next level is having a trading plan and being able to enact that trading plan, pull the trigger, click the mouse button, execute the trades based upon the signals of your system and not based upon the emotions in your mind. That's going to be the difference. Win or lose, enact a trade. As we say often, a good trade is one that is entered and exited based upon rules, regardless of the outcome. So I want to thank everybody for watching. Again, this is the free version. This is the abbreviated version. If you want to get the full version of this free podcast, there's our link, AccendoTraders.com. Subscribe, podcast HTML. You'll get the free version, the full version every week. As we said at the beginning of this video, what's different is there's no trades in this part of the video. So you need to download the full version to get the trades that we're going to be looking at for the week. If you're ready to get a paid subscription, every day we put these videos together. We put the free ones out on the weekend. There's a link. We do have a free trial week, 2-week membership going on right now, but the back-end programming is not generating the username password. So I know we've had several people try to do that, and I apologize for the inconvenience, but we should have that fixed tomorrow. There's the blog, and of course follow us on Twitter, giving great information on Twitter, and I will see you guys next time. Thanks.